Ongoing economic uncertainty has led to a massive reduction in the number of available properties for those who have invested in a 1031 exchange. 1031 exchanges allow investors to defer the payment of capital gains taxes typically incurred by selling the relinquished property and purchasing a like-kind replacement property of greater or equal value. When selecting a replacement property, investors have three options. First, select any three properties as potential exchange properties. Next, select any number of properties so long as the aggregate value of the properties does not exceed 200% of the value of the relinquished property. And lastly, select any number of properties so long as investors purchase at least 95% of the aggregate value of the identified properties. These three options intend to give investors greater flexibility with their investments. However, today's market has created barriers to completing the 1031 exchange process, as investors struggle with identifying suitable replacement properties. As a result, investors are turning to more suitable alternative investment opportunities like Delaware Statutory Trusts, or DSTs, to satisfy 1031 exchange requirements. DSTs deliver income-producing assets that have the potential to provide a positive cash flow, even through current economic volatility, as well as diversification for real estate investors, all of which enable investors to qualify for full tax deferral. DSTs are solving two of today's biggest challenges for commercial investors: quality inventory and available lending, thus making them the perfect investment solution for today's commercial investors in the new year. If you're interested in learning more about replacement properties, 1031 exchanges, DSTs, or other real estate investment strategies, our team at Perch Wealth would be happy to answer any questions you may have. We're here to help you achieve your investment goals. Contact a member of our team today or visit perchwealth.com for more information. This video presentation is not an offer to buy or a solicitation to sell a security. The video is a discussion pertaining to one or more investment strategies and/or asset classes, and is not a discussion of any specific offering, past or present, of securities. As a reminder, there is no guarantee that any investment or strategy will perform as targeted, and any investment involves the risk of the loss of some or all principal invested. This video contains statements intended for educational and hypothetical purposes only, and is not to be construed as a promise of performance. Information presented herein reflects the opinions of the speakers and is from sources believed to be reliable, but all information is subject to change. Not an offer to buy, nor a solicitation to sell securities. Information herein is provided for information purposes only and should not be relied upon to make an investment decision. All investing involves risk of loss of some or all principal invested. Past performance is not indicative of future results. Speak to your finance and/or tax professional prior to investing. Securities offered through Emerson Equity LLC, member FINRA SIPC. Only available in states where Emerson Equity LLC is registered. Emerson Equity LLC is not affiliated with any other entities identified in this communication. There is no guarantee that any strategy will be successful or achieve investment objectives. Potential for property loss. All real estate investments have the potential to lose value during the life of the investments. Change of tax status. The income stream and depreciation schedule for any investment property may affect the property owner's income bracket and/or tax status. An unfavorable tax ruling may cancel deferral of capital gains and result in immediate tax liabilities. Potential for foreclosure. All financed real estate investments have potential for foreclosure. Illiquidity. Because 1031 exchanges are commonly offered through private placement offerings and are illiquid securities, there is no secondary market for these investments. Reduction or elimination of monthly cash flow distributions. Like any investment in real estate, if a property unexpectedly loses tenants or sustains substantial damage, there is potential for suspension of cash flow distributions. Impact of fees and expenses. Costs associated with the transaction may impact investors' return and may outweigh the tax benefits.